Hello traders and welcome to another video analysis. Today is Friday, 6th of November 2020 and today is the non-farm payrolls Friday. So important data to be released from the US, and of course we are still counting votes of the presidential election of 2020. We will see who is going to be the next president of the United States. Moreover, today there are some important data from Canada, so let me just swing down and we will see what is going on the market today. So on the Friday, the first important thing was the Reserve Bank of Australia monetary policy statement that was released at 2:30, but as you can see, not much has happened since then. At 8:45 there was some unemployment data from Switzerland to be released, and as you can see we got some payroll data from France, and the trade balance data from France, but this is not important because everything will be shadowed by unemployment rate and non-farm payrolls data from the United States. Okay, half past 3 today. As you can see, the unemployment rate is expected to decrease from 7.9% to 7.7%. Interesting. And non-farm payrolls are expected to decrease as well from 661,000 to 595,000. So this is very important because if the data beat the expectations in the positive way, so the data will be better than 595 and 661, then the euro will rally, of course. If the data will be worse than expected, then unfortunately what we can see is the euro to fall and the temporary flow into the US dollar, of course. So we got other data from the US, like change in private payrolls, change in manufacturing payrolls. This is kind of an important data, a piece of data as well. Average hourly earnings, if they are increasing or they are decreasing. This is kind of important for this month. The market is expecting the average hourly earnings to increase from 0.1% to 0.2%, and it's important to see if the participation rate is decreasing as well, because all of this will be an indication of the recovering economy, but we will see what we get. The other very important data is, of course, the unemployment rate and employment change from the Canada. As you can see, the unemployment rate is at the level of 9% and it's expected to stay at this level, and the employment change is expected to drop from 378,000 to 59,000. So the American dollar to Canadian dollar is the other pair that we will analyze today. We got some speeches at 4 o'clock from Governor, Bank of Canada Governor, and Bank of Canada Deputy Governor as well, and then at 5 o'clock IV Purchasing Managers Index from Canada will be delivered as well. So from over the night from Friday to Saturday, we should have the official results of the presidential elections in the United States. So today's markets might be a little bit nervous, and the close of the stocks in America might be kind of important, might be very might be key event of the day actually, except of course the unemployment rate and non-farm payrolls. So what I think we should do is to take a look at the euro dollar, American dollar and Canadian dollar. I think this is the must do analysis for today. So what is going on the euro dollar? As you can see, we got this very strange candle here, very specific candle, but this is what's going on when there is a presidential election once in 4 years. So it looks like a kind of a pin bar, kind of a very dodgy candle, but look at this, we closed below the open, so that's good. The following day we got up day, and today it looks like we are approaching the level of 1.1882, which is a intraday technical resistance. We can even hit 1.19.16, but the ultimate, of course, level is 1.2013. This is the high from, I think it was 1st of the September 2020. So if we just do this, if we just zoom out, we don't need this trend line anymore. We can see that one more trend line can be made, yes, from the top and this resistance, and as you can see, the market is right now just under this trend line. The question is whether this trend line will stop the bulls from rallying. I think it's still uncertain, because market participants await the data from the United States, the non-farm payrolls data, and those data will trigger the move. And then later during the day, I think the close of the stock markets in the United States will be key for the movement of the of the euro dollar, of course. And please remember that if American indices, American stocks are going up, the euro is going up as well. And if the data are non-farm payrolls data are better than expected, the euro will go up. So we are poised for another leg to the upside if this local trend line resistance around the level of 1.1840, the local high from yesterday was 1.1882. If this zone is violated, then we can reach 1.1916, and even if we will extend this move 100 pips higher, we can reach 1.20 for sure. So that's the situation on the euro dollar. As you can see, another interesting pair is, of course, American dollar to Canadian dollar. So what do we have here? Again, we have a rejection. We have a rejection from the 50% of the Fibonacci retracement, 1.3354. 1, 2, 3, 4 days we are going lower. All of this technical supports at 1.3143, 1.3088, 1.3043 is were just violated, and right now, as you can see, we got the upper shadow again, just like here, upper shadow, upper shadow, upper shadow, upper shadow. So there is a bearish pressure on the American dollar, and we might hit today 1.2996, which will be the level below 1.3 already. So this is our target for today, for Friday. The 50% is clearly rejected, and we might continue. Look at this. We might continue our downtrend. So US dollar versus Canadian dollar still in a downtrend, and we might see more bearish pressure and lower levels today for the Canadian dollar. So the last market for today will be S&P 500. So let's just take a look what is going on this market, because today's close might be important. Let me just switch to there you go, to the SPX. So as I have noticed yesterday, we are still making this triangle. The triangle is still in developing. As you can see, we just hit this, there you go, this level. This is the high for the wave D. It's right now, this pattern looks like a textbook example of a triangle, right? So we have hit, what was the high, was 3,528, but please pay attention to today's close and pay attention to the last hours of the trading on of the American stocks, because this might be just simply reversed, right? So the next candle, if we will follow this triangle pattern, the next candle should go down, or like here, should just consolidate within this range of the previous day bar. So please pay attention on the S&P 500 index and on the other indices, because it it's crucial right now to see whether this is the pattern that market is following, or we have just finished the A, B, and C correction, and now this is the impulsive wave to the upside. Any breakout higher above the 3,528 will definitely lead us to 3,550, and then towards, of course, the technical resistance at 3,589, and that would mean that our triangle pattern had been invalidated. So please keep an eye on the S&P 500. It's very, very important to especially today, to see how the market will react on the data, right? Okay, so that's everything for me. The market is not trading very often. Volatility is a little bit subdued. Everyone awaits the results of the presidential elections, and everyone awaits the NFP data. So right now, that's everything I can do for you with today's analysis. I hope you will be here on Monday morning with another analysis from me. So thank you very much for watching. Have a nice weekend. Take care. Bye bye.